It's Friday on Wall Street. You made it, I made it, and your portfolio made it. I'm Yahoo Finance Executive Editor Brian Sozzi, and this is Opening Bid. Well, I would love to be up here sharing my excitement for putting on my headphones later and waxing my car, something I very much enjoy doing, no matter if it's 20 degrees outside. There is a more pressing topic I want to dive into today. That topic is the momentum swing underway in tech. I woke up at 2 a.m. today, checked some of our internal data here at Yahoo Finance, and saw the ticker pages for Nvidia, Micron, Tesla, AMD, TSMC, Intel, and Microsoft all being lit up with strong activity. The Nasdaq is acting strong to end the week as well. I think all of this makes a lot of sense. Here are two reasons why. All right, first, TSMC's earnings on Thursday were extraordinary. Sales are seen growing 30% this year, a number I think could prove conservative given the strength of the AI boom. The report was a clear signal that AI demand remains red hot, and the bears are off base. It's a vibe I got from CrowdStrike founder and CEO George Kurtz, an exclusive chat I had with him this week.
AI and AI agents are going to change the world. There's no doubt about that, but that has to be done in a secure way that minimizes risk to the business and provides a level of compliance. And if we believe there's going to be more AI in the next 5 years, which I do, you're going to have more security and you're going to see an explosion of security to protect all of the use cases around AI.
Who might argue with that guy? He just spent $300 million to buy into the Mercedes F1 team. Not going to do it. 2, tech hasn't started the year great, so that may be attracting dip buyers into earnings for the group beginning very shortly. Earnings are likely to be quite strong for tech. A reminder on the power of the AI revolution. Consensus expects big tech EPS growth of 21% in the fourth quarter to far exceed the rest of the entire S&P 500 at about 3%. Who doesn't want a piece of this growth, especially if you can get it at a discount? Sure, I know many of you will get at me on X and note Nvidia only being up 1% on the year, while the SOX index, that's the index that measures the performance of semiconductors, is only up 9% as a red flag on the group. And yes, other Mag 7 names are off to a tough start, such as Meta, off by 5%. I would push back by saying this: a renewed rally has to start somewhere. Why not here, and why not now? Here on my opening bid roundtable, Eric Lynch, Suncoast Equity Managing Director and Co-Portfolio Manager, alongside Yahoo Finance Senior Reporters Brooke DePalma and Inez Ferre. All right, Eric, I'm going to start with you here. Is this the start of something more in tech?
Yeah, I think this quarter is going to be more of the same, Brian. 80% of the S&P 500 earnings growth in Q4 is expected to come from the IT sector. That's pretty much in line with the last 3 or 4 years.
Do you think these tech stocks, I mentioned at the top, Eric, they've come in a little bit to start the year. Have they come in enough? If one of these Mag 7 puts up 30% growth and the street was looking for 29%, is that upside enough?
Yeah, I think so. I mean, the Mag 7 have become the Lag 7, right? They've generally been lagging for 6 months or more now. But there's still a lot of momentum behind the businesses. One of the reasons why they're trading off is not so much that the business momentum isn't there. It's over this concern over the level of CapEx that they are guiding ever so increasingly more. And so if we get some type of moderation in that, that'll also be highly useful for these names. I don't expect that in this quarter per se, but just to put some valuation numbers behind it, Nvidia is now trading at 25 times forward earnings. Meta is now trading at 19 to 20. That's basically in line or lower than the S&P 500 for growth that is multiples higher. So the risk reward for some of these names looks really, really compelling.
Brooke, hit me with a look at some of these NASDAQ names. Now, not all NASDAQ stocks are being traded or being treated equally right now. Still seeing some weakness in software, but we are seeing the broader NASDAQ come back alive, even if it's just for the past day and a half.
Brian, I was actually just looking at the YF Interactive to see where these players open. If you take a look at intraday trading, what we're seeing here is pretty much green across the board, led by Micron, up nearly 7%. Nvidia moving higher as well. Amazon, Broadcom, Apple, Google just reversing into the green there as we kick off today's trading session. Microsoft, Tesla, Meta, all in the green this morning. Even Palantir moving higher, up more than 2%. But if you take a look year to date, a bit of a mixed picture here. Apple, Microsoft, Meta seeing some downward momentum of about 5%, whereas Google, as we discussed a lot during the month of December, that Gemini product really a star to kick off 2026, sending that stock to move higher, up more than 6%, and Nvidia trying to hold on to momentum, up more than 1%. But certainly all eyes are really on big tech, Microsoft, Alphabet, and Amazon as we make our way into this earnings season. Really, that momentum needs to hold on for these hyperscalers hyperscalers.
And as you heard Eric call out some of the valuations, NVIDIA 25 times forward earnings, Meta 18, 19 times forward earnings. I take that as back up the truck levels. Now, I'm not saying go out and buy these stocks, but now could be the time where you back up that truck and you reassess some of these names.
Yeah, certainly it's a time to reassess some of these names. And also, I mean, you're talking about the NASDAQ and that this could go higher as far as this AI tech trade. I'm looking at some of the semiconductor stocks. I mean, you mentioned TSMC, but if you take a look at Micron year to date, look at Micron, what it's doing today. You have a director that just bought 23,000 shares in the open market, and it's at all-time highs. And the street is expecting a Wall Street price target of around $340. I mean, it's pretty much around, it's beyond that. So obviously that's bullishness for the stock because you've got an insider that's buying it. And then you've got the whole, you've got ASML that's up double-digit percentages. This has only been like 2 weeks of the year, and you're seeing these big gains in these semiconductor stocks. So yeah, look, if you take a look at what just Brooke showed you, I mean, the Mag 7, there's some mixed, there's some weakness year to date when you talk about some of these Mag 7s, but they're not falling off a cliff.
Very important point there. Insider buying is better to see than insider selling. Eric, let me get back to you here. Out of all the Mag 7 names, again, they have been under pressure to start the year. Are there one or two that you really like into earnings, and if so, why?
Yeah, I think NVIDIA is one. You're still looking at a business, guys, that's growing 60 to 70% revenues and EPS. The TSMC print yesterday was a great read-through, basically accelerating their guidance on accelerated AI chips, 55 to 60%. So NVIDIA looks great. You know, they're talking about $500 billion of visibility on their high-end chips this year. So that should be good based on this price weakness. Same thing with Meta, like I said earlier. Meta is interesting because it's the single AI use case that's actually being deployed at scale to generate billions of dollars of profits for a company in terms of the increased efficacy of the advertising for Meta. So that's a business that, you know, I don't think it's getting credit for the fact that it's the singular successful application of AI on the entire planet.
Brooke, I like that note you slacked me this morning from B of A looking at the earnings growth of the sector.
Yeah, what we heard from BofA this morning was they expect about a 4% growth year over year, or 4% beat rather, in this upcoming quarter. They specifically said that when you look at what you see on the screen right here, 20% for the tech sector, overall about 7%. They said specifically that the catch here is that 4Q is really still about all AI. Think of it this way, is that, yes, we're talking about this momentum that we're seeing in the early year, but really this is sort of a look back at where we sat during the months of, late October, November, December. And so really all eyes are on this strong momentum within the AI sector, and Bank of America really thinking that this will be a continuation of what we saw in 2025, more optimism yet to come, and a beat by about 4% is what they're highlighting within that note this morning.
And as I'm watching a lot of things for earnings season, but what I think is going to be very interesting as to what a lot of these companies call out in terms of commodities. We've had various commodities, precious metals hit all record highs. Oil prices have come down. So it's two different, wildly different stories, and different companies could do well and others could do absolutely horribly because of this.
Yeah, as you mentioned, oil prices have come down, but then you do have now President Trump wanting big tech to pay for energy. So there's a lot that's going on in the space. The input costs for the metals, as you just mentioned. I spoke to a miner just 2 days ago, a Canadian miner, that they are building the biggest silver mine in Mexico. He told me that he's had calls from Silicon Valley about investing in mining. This is a business that nobody really wanted to get into years ago, and now he's fielding calls. He's telling me corporates are coming. So there is definitely interest in the metal space now that you are seeing metals at all-time highs. But yes, this does create sort of these costs, higher costs when it comes to these metals that are needed for the reshoring, industrialization, data centers, et cetera. And then on the other side, you've got the lower energy costs.
As the old timers would say in the news business, Inez, I love that shoe leather reporting. Dig it. I mean, you're talking to miners. Like, where else are you going to get that type of reporting? But Yahoo Finance, love it. Eric, back to you. If you bought into this view coming into the year that you have to broaden out your portfolio from the Mag 7, go out and buy one of the other, 493 other stocks in the S&P 500, are you set up for disappointment because these companies are not going to report the same earnings growth or the level of earnings growth that we're going to see from the Mag 7?
That, Brian, is the big question for 2026. Because what you're seeing in estimates is that you are seeing earnings estimates rapidly increase for outside technology. So industrials are expected to grow earnings 15%, materials 21%. We just talked a little bit about that. Other areas of the economy as well. But tech is still supposed to lead. Now, the problem I'm seeing in the data is that the cyclicals that are being forecast to run, and you're seeing that in the stock prices, right? The jobs numbers aren't good in cyclical areas. The jobs print last week was basically, continued healthcare, food, stuff like that. Meanwhile, construction, transportation, retail, all down big time in the month of December. And also profits for Q4, similar story. Industrial profits are expected to be down for Q4. So it's still kind of a show me story, Brian, and it's predicated on whether or not all this fiscal stimulus from the big, beautiful bill, the monetary stimulus from the cuts, maybe increase kind of relaxed credit standards, all those things, if those come into play and reflate the economy, then that 493 will probably grow and be pretty good. If it doesn't happen that way, then given how stocks are running, there could be some disappointment, and you could see the tech leadership kind of reassert itself.
I made a note, Brooke, walking over to the set. Did you see this Walmart news? I know we're going off script here, but Kat McClay stepping down as the CEO of Walmart International. Now the guy who ran Sam's Club is going to take her job. I would say on one part I'm surprised because Kat did phenomenal work at Walmart International, but then I'm not surprised because when you have a new CEO come in like John Furner taking over W. Million, they all want to put their own leaders in, they all want to put their stamps in the own business, but I am surprised by this one.
Brian, what I will say is I've had the chance to chat with Kath McClay quite a few times. She is an incredible executive. She came to the company just a few years ago. She joined as Sam's Club CEO. She went on to lead Walmart International. And in my opinion, as bad as it is to say, I think that this is a big loss for Walmart moving forward. But under John Furner, I know that this morning, Kath McClay, the news came out last night that she was departing Walmart effective quite soon, and this morning they announced new C-suite executive change-ups. Of course, as you just noted, as similar path to what Kath had gone, the former, or rather current CEO of Sam's Club will move into Walmart International. Also worth noting that the gentleman, David Gugina, who oversaw e-commerce for Walmart US, will now move into the US CEO role for Walmart, overseeing all store operations, all retail operations for Walmart. So a similar, journey to John Furner. David really has led the momentum behind the e-commerce growth that you've seen for Walmart over the past few years. And so I'm really eager to see how David takes on this role overseeing the U.S. Operations for Walmart moving forward, especially in this environment where convenience really matters as well as value for the U.S. consumer. And I'm extremely eager to see where Kath goes next. I think very highly of her.
Brooke, you are so spot on with that analysis. I 1,000% agree with you. You have not heard the last of Kat. I got to spend some time with her too. I think she's a tremendous executive, and I am surprised by the news. All right, Eric, Brooke, and Nick, stick with me. Much more ahead on opening bid setup on Netflix shares into earnings next week. Really bothers me. It should bother you too. More on this next. When Netflix reports earnings on January 20th, that would be next week for you keeping track. Investors will have to use both sides of their brains. And even then, there is no guarantee a logical conclusion on the stock will emerge. Sorry. Here's what I'm hearing on the stock into that report. One, there is real concern on the street that Netflix will guide 2026 profits below consensus. This reflects the uncertainty on the ongoing cost of the bid for Warner Brothers and tough financial comparisons to a year ago when the company hiked prices. 2, while the quarter is expected to be good on the back of strong content such as Stranger Things and Squid Games, it may not be strong enough to offset investor concerns about Netflix buying Warner Brothers for $72 billion. The big question is if both of these worries are reflected in Netflix shares, seeing as they are down 30% in the past 6 months, with most of the loss, I should say, occurring since the early December bid for Warner Brothers. Let's put it to the OB roundtable. Eric Lynch, Brooke DePalma, and Nez Frey. Eric, coming to you here first. The fundamentals of Netflix still look strong, but is it hard to give those fundamentals the respect they deserve in light of this gargantuan bid for Warner Brothers?
Yeah, Brian, it is hard. I mean, I know one thing that hasn't worked, and that's been buying Warner Brothers. That
definitely hasn't worked, like, at all. Like, unless you bought it, like, I don't know, like 2 months ago or something.
Right. And the number just keeps getting lower, Brian, on the deal valuation. 2001 with AOL and 18 with AT&T. So I don't like it. I much prefer Netflix licensing unbelievable content like K-pop Demon Hunters and using their vast distribution platform to monetize that. So they've done a fantastic job moving from negative free cash flow to free cash flow, post-pandemic. It's a great business model. I hate to see them baggage themselves with all this debt and this extra content that they probably just don't need.
Eric, it's clear that the streaming space is still growing. So then where do you go? I just had a story hit on Yahoo Finance right now. It's on our homepage, looking at the benefit to Spotify, which is streaming music, as they lift prices. I mean, the lift to profits and sales could be really huge. Is that one place to look?
Yeah, I think that is certainly the bullish case for the deal. Certainly, it almost seems more preemptive, Brian, just the ability to remove a major competitive threat with a lot of great content, admittedly, really gives them a huge library and kind of economic moat. So it's not crazy. The question is, how much do they have the license to increase their pricing per membership, and how much do they get increased membership? It just all depends on how it pencils out. They're talking about $3 billion of operating expense synergies. That's great. So it's not totally insane. That's true. But it just is not as clean a business as it has been to date, when it's finally kind of operating in all cylinders and probably still has pricing power.
And as I miss the days where I would pull open a Netflix earnings report and just look at all the money they were burning through in a free cash flow basis. But now I can't do that, one, because they are generating cash, so that's good to see. But again, in the back of my head, is this $72 billion deal?
Yeah, well, the longer that these types of bids drag on, the more difficult it gets, correct? There are some on the street that are saying, look, this would be nice for them to have. They do not need necessarily to have this. Netflix has licensed Warner Brothers data content, and they have data, so they know what works, what doesn't. And so that's one plus for this. But certainly, if it's dragging on, and it's obviously dragging on the stock. I mean, you were mentioning some Wall Street commentary looking at KeyBank, of them lowering their price target to 110 from 139, citing this sort of near-term uncertainty. But long-term, they do believe in this company. I mean, just the scale of what they've been able to do and accomplish. They're talking about pricing power, global scale, ad market expansion. So long-term, they're bullish, but certainly this causes a lot of uncertainty in the near term.
Brooke, we were just talking about the leadership changes over at Walmart. We could be about a month and a half out from finally getting a new CEO of Disney with Bob Iger. I mean, the decision is supposed to come very soon.
I definitely think what we're seeing here is this change up within the industries, not only for streaming giants, but also when it comes to what sort of momentum we want to see within their amusement parks, within their streaming operations, and within the other sectors under this huge umbrella that is Disney. I think after seeing, not the right executive, perhaps, to lead Disney after Bob Iger stepped down and that change up happened, this new executive really needs to come in and really understand how to move move a iconic name like Disney forward and really understand how to lead operations, both from the streaming forefront and also the park operations.
Yeah, that ousted CEO, Brooke, you had a beard. You can't have a beard if you're going to be the CEO of Disney. I'm just going to say it. Like, you just can't. As of today, 3.9% of the year is already over, believe it or not. And within the time we have completed so far in 2026, an interesting trend has emerged. Some of the market's most well-known social media stocks are off to a very bad year or a good year. There's really nothing in between. Reddit stock was smashed by almost 10% on Thursday as RBC said its work shows weakness in ad dollars for small and medium-sized businesses. These are both important ad groups for Reddit. Meta stock is down 5% this year because investors don't trust its CapEx guidance for this year. They think CEO and founder Mark Zuckerberg will hike it up again in his AI push when they report in a few weeks. And as for Pinterest, there is some chatter the big-time sell-off in the stock last November due to cautious guidance was overdone. So you were seeing a little bit of nibbling here by the Pinterest believers. The stock is up slightly year to date. Bottom line, what social media stock should be in your portfolio right now and why? Eric, back to you. I think you told me at the top of the show you like Meta. Make your case.
Yeah, I like Meta because it's growing its revenue at 26% in the last quarter. Is probably going to do something like that similar in Q4. It's a business that has a line of sight on applying AI at scale across all its properties. No one else can say that, as I mentioned that earlier. So at 20 times earnings, the recent stock kind of declines are really self-inflicted, as Meta has historically been wont to do with their aspirational spend levels. As they've also done in the past, Brian, is they do get religion once they're punished enough. And so without reducing CapEx in the metaverse, I think that the street will be watching for them to rein in their CapEx on their AI aspirations outside of their ad placement AI. And if that happens, I think the stock is really going to run at just 18 to 20 times earnings for forward earnings.
Me personally, I don't have any problems with Pinterest or Reddit. I think both of those companies are doing some really good things on the AI front that are going to bear out in some pretty good profits this year. But Inez, let's just stay on Meta here for a minute, because if they come out and raise CapEx guidance again, when they reported a couple months ago, their CapEx guidance was very strong. I think it spooked some folks on the street. If they raise that again, this stock could get crushed.
It could get crushed, but this stock has gotten crushed in the past, and then it goes back up. Meta has a way of that happening to this stock, where it'll plunge 10% or something, and then investors come in and buy it again. The fact that they bought Manus AI, I mean, I've been watching that, and that I've used it just to test it out to see what it does. It is significant. I mean, this takes them from a simple a little chatbot to agentic AI that they can offer it to their billions of users and in their business operations as well. So I think that was a significant acquisition that they made, and I think that we're going to hear more about it in the future.
Brooke, I'm not sure why I think this, but I think you like Pinterest. I think you're an avid Pinterest fan. I could be wrong.
Brian, interesting. I have been using Pinterest a lot for wedding planning.
Oh, there we go. I mean, so I knew my colleagues were like,
But I will say, I was reading a note from Laura Martin this morning about Reddit, and Reddit's something that absolutely fascinates me. I'll admit, I just became a user in late of last year, and she pointed out something really interesting within her note. She actually said that based upon a study from SEMrush, Reddit was cited in approximately 40% of AI-generated responses. And that sort of stat blew my mind, because when you think about the type of content on Reddit, one, it's all anonymous users. And so I feel as though people really go to the platform to confine it almost, to share maybe something that they wouldn't even tell their closest friends. So it's really this honest, open platform that I've seen as a new user, I find very helpful. And so I think that it's a really interesting one. And I know that it's not on your options here, but don't discount Google's YouTube. Every time you ask a young person where they're going or what they want to be when they grow up, it's primarily a YouTube content creator. And so don't discount that as perhaps an alternate social media app as well.
You know what? Young people, go out and build something. Forget trying to create content on YouTube. I can't knock the hustle. Go out there and build, fix a car or something. All right, thanks for the opening bid roundtable. You all have a wonderful weekend. You brought the heat for me today, and I appreciate it. Straight ahead, I'll be hopping on Market Catalyst to chat with Carhartt CEO Linda Hubbard, and Julie Hyman will join me as well. Important week for Carhartt as it teams up with Ford to address the essential worker shortage.